Insurance policies can be hard to understand, but it is something that's super important that you understand how the occupancy and vacancy of your insurance policy works. This week on the Saskatchewan Real Estate Podcast, Declan O'Reilly joins us once again to dive into the world of insurance and helping us understand why unoccupancy and vacancy can be a very dangerous topic when we're discussing insurance, and why you, as a homeowner, need to understand your various policies because it could cost you dearly. Hope you enjoy.
This is the Saskatchewan Real Estate Podcast.
Hello and welcome back to the Saskatchewan Real Estate Podcast, your home for all things Saskatchewan, all things real estate. Really great channel if you're a first-time home buyer here in the province or a potential investor. We have on a wide range of people. Today, we are going to a returning guest again, though. Declan O'Reilly, based in Saskatoon with O'Reilly Insurance, part of the cooperators. It's really great to have you back, Declan.
It's good to be back.
Someone didn't catch our first episode. Just give us a brief introduction of yourself.
My name is Declan O'Reilly. I'm the owner of O'Reilly Insurance and Financial Services, part of the cooperators family. And I've owned this office for coming up on 18 years. And 10 years prior to that, I was with Sun Life. And so I've been in the insurance business for 28 years, and I love it.
Time flies by when you're having fun and if you're Irish.
It does, yeah.
Today, I wanted to have you back on, Declan, because insurance can be, it is a big part of real estate and the protection of the asset, that whether it's your home, whether it's an investment property, it's really important to make sure that we have the correct coverage in place to make sure that these assets don't vaporize through a fire or flood, or the value that's there. And so I wanted to dive into, your primary house versus a rental property, and also touching on vacancy and how that can really affect our insurance. But just give us a brief overview, the difference of insurance between our primary residence and a rental property or investment.
So first, what I would like to say is that it's really important to have this conversation with your current insurance provider. And the reason for that is that insurance policies can be different from provider to provider. So what we provided to cooperators could be different, slightly different than what SGI provides in certain circumstances. So I'll talk in very general terms about insurance and some of the coverages and gaps. One of the reasons you need insurance is just to protect your stuff. Make sure that if you have a loss, somebody is going to help you recover, and that's usually the insurance company. So you buy insurance to transfer the risk of a loss from yourself to somebody else, and the insurance companies will provide that protection by the fact that you pay them premiums. You pay them premiums, they'll offer you protection. So when you have a house or you own a home, you're protecting the house, and you're also protecting everything that's in the house as well. So it's really important to have a conversation with the insurance provider about the reconstruction value of your house, and making sure that that is calculated properly. And whether it's a house that you own or a house that you're renting to somebody else, if you own the house, you want to make sure the reconstruction value of the house has been properly calculated. And in my mind, it's the most important thing in your policy, because you want to make sure that what you had is being properly replaced by the insurance company. So don't hide anything. If you've got a really nice kitchen, tell them you've a really nice kitchen. If you've got the basement finished, let them know the basement is finished. Insurance companies want an opportunity to properly underwrite your property, and so you have to full disclosure about what it is that you have and what you own.
So on the insurance side, if we're looking at, primary residence versus rental, that kind of line that you're kind of taking us through, it is the same for both, whether it be a place that you live or whether it's a rental property. You still want that replacement value. You want the property that you had to be replaced, but to basically the standard that it was before the incident.
Yeah. So when you buy any insurance, there are a number of different ways that the insurance company can settle a claim with you. There is what we refer to as actual cash value. So the actual cash value is the depreciated value of your property. So typically you see this on automobiles. So when you have a car that's 10 years old and it gets written off by SGI, they will not give you the value of a new car. They will give you the value of your car if you were to sell it that day to somebody else. So to you, the car might be worth $50,000, but according to SGI, it's only worth 15 or 20. So that's the depreciated value. Replacement value is uh, basically getting replaced the value that's on the policy. So if you have replacement cost insurance and on your policy it says the property was worth $500,000, you will get up to $500,000. You won't get more, but you'll get up to 500. Guaranteed replacement value is what mortgage companies look for, what lenders look for, and what you should look for as a homeowner, whether it's a cabin, your primary residence, or a property that you're renting to somebody else. So the guaranteed replacement value means that we, the insurance company, will replace your property to exactly what it was before the loss, even if you were underinsured. So it's the insurance company's responsibility to make sure that that calculation is done properly. So that's why it's critically important that you disclose everything about your property. So if you have a two-story building with a bonus room over the garage, and the garage is a 2.5 car garage that's attached, and you've got a sunroom at the back, and you've got a deck attached, and you have a swimming pool, you need to disclose everything. Allow the insurance company to properly calculate the reconstruction value, and they can then give you a guaranteed replacement value. So I'll give you an example of that. You sit down with your insurance provider, you give them all the details, you're totally honest. They go onto Google to look at your house, um, they do a calculation, and they come up with a reconstruction value of $750,000 for your house. That $750,000 has nothing to do with market value. It has nothing to do with the value calculated by the city of Saskatoon. It is purely the reconstruction value on the house. 2 years from now, you have a total loss house fire. Everything's destroyed. And the insurance comes along and they want to rebuild it. You're insured for $750,000, but the reconstruction value is coming out at 820. That gap in coverage is the responsibility of the insurance company. They give you a guaranteed replacement value because they did everything they possibly could to make sure that you are properly insured. So if you had, let's say, marble countertops, designer kitchen, uh, very, very high-end fixtures in your house, but you told the insurance company everything was builder's grade, there could be an issue. So you want to make sure that there's full and proper disclosure of your house. And that applies to rental properties as well. If you have a house that you're renting to others, you want to make sure that that number is calculated properly.
If I can go into the mind of a consumer, part of what we do is we say, I want the most coverage for the cheapest cost. And so in what you're saying here is it does not do a consumer any good to try and save money on your insurance by not disclosing something, because the reason you're getting insurance is for the replacement value of those things. So if I decide I want a cheaper insurance policy, so I forget to tell you about the factors of my home that are maybe quite expensive, I'm
You're not doing yourself any service.
correct. It's better to be as upfront and as open as possible at everything that you have in the property so that the insurance is the correct coverage.
The one thing I'll never compromise on is the reconstruction value of any property. And I would extend that to commercial insurance, farm insurance, home insurance, cabin insurance, every type of insurance. Make sure that the reconstruction limit is absolutely correct. One of the things you have to remember about insurance is that it's an agreement between two parties. It's a joint responsibility. Not all the responsibility is on the insurance company. You go in, you enter into an agreement to make sure that your property is going to be looked after properly. And the more you disclose to the insurance company, the better they'll be able to protect you. There are other ways to save money. Uh, you know, um, Change your deductible. If you increase your deductible, what you're telling the insurance company is that you're going to take on a greater percentage of the responsibility. So typically in a home insurance policy, it'll be a $1,000 deductible, but we see more and more customers moving to a 5,000 and in some cases a 10,000 deductible. And I would not go higher than a $10,000 deductible.
Shifting the conversation a little bit, but kind of staying in the same way, a lot of people, and we'll kind of take it back to the primary residence versus a rental property. What will come up is the property has to potentially be vacant for a period of time. So if it's a primary residence, probably you're going on vacation for an extended period of time. If it's a rental property, it might be much more common that every year there might be a period where there's a little bit of turnover and the property has to sit vacant. Expand for us the dangers of vacancy and how it ties into insurance.
Okay, so first of all, there is a huge difference in the insurance business between unoccupied and vacant. In the insurance business, unoccupied is a property that you've left, but you have every intention of coming back to. So you go on holidays, you're a snowbird, you're gone for a couple of months, um, you have a cabin at the lake in the summertime and you go and spend all the summer at the cabin, or you travel, you want to go to Ireland for a couple of weeks. As long as there's an intention to come back, the house is classified as unoccupied. There are things you have to do when the house is unoccupied, especially in what we refer to as the normal heating season. So the normal heating season would be the time where your pipes could freeze. So you need to make sure that you either have an alarm company that's monitoring the heat in your house, you have somebody coming in on a very frequent basis to check to make sure that everything's okay in the house, or you turn off all the water and drain all the pipes. My preference is that you have a monitoring company, especially if you're going to be away frequently from your house. It's the safest thing to have. Um, People who come to inspect your house are not always reliable. They may skip, they might forget, they may say it's not a big deal. Draining the pipes is my least favorite thing to do because you might forget to drain one. And the biggest concern that we have as an insurance provider is that the pipes in your house are going to freeze. And if you've ever seen a house with frozen pipes, you'll know what kind of a disaster it is. So if you can imagine a two-story house with copper pipes going from the basement up to a bathroom on the second floor, how challenging it would be to replace all those pipes and the damage that those pipes could cause if they did rupture and bust. I've seen pipes that have copper pipes that have bust, and it's amazing how powerful water is, especially when it turns to ice. So again, I would go back to one of the things I said earlier is that if you are going to be away from your house for any period of time, talk to your insurance provider, ask them specifically about the insurance policy that you have, what coverage do you have while the house is unoccupied, and what precautions you have to take. Now, vacancy is something completely different. And vacancy is something that causes homeowners heartache. So vacancy is you've left a house with no intention of coming back. So you could have sold a house and it's sitting vacant on the market um, for sale for a couple of weeks or a couple of months. It could be a rental house that's going to be unoccupied, sorry, going to be vacant between tenants. So most insurance companies have very specific rules around vacancy. So a house is allowed to be vacant for X number of days. It could be 5 days, it could be 10 days. Your insurance provider is the only one that can tell you how many days it can be vacant without doing something. So let's pick most companies use 5 days. So your house is vacant for 5 days. Once it's been vacant for 5 days, there is no water coverage. There is no vandalism coverage. Coverages are streamed back. And the reason for that is that there's a huge number of claims on vacant properties. Claims on vacant properties are very high. Fires, vandalism, water, all of those things are increased in vacant property. So insurance companies are what they're basically saying is, you as the homeowner have a greater responsibility to look after your problem, to make sure it's protected against vandalism, make sure it's protected against any water damage, and just overall making sure that you're looking after your property when it's vacant. You can't just leave it vacant and walk away and say, well, insurance is going to look after it. So after 5 days, coverages are stripped back. Then at the 30-day window, insurance companies will require you to have what's called a vacancy permit. A vacancy permit is permission from the insurance company to leave the house vacant. Now, those coverages are still removed, like vandalism and water coverage are still removed, but now you have permission from the insurance company to leave your house vacant for beyond 30 days. You still have to make sure it's inspected. You have to make sure there's an alarm company set up, checking the temperature in the house. And you have to do your due diligence to make sure that the house has been properly looked after. So you can't abandon the house and walk away from it. So vacancy is complicated. It's complicated in that you're allowed to have it vacant for X number of days, and then beyond a certain number of days, coverages are stripped back. And then there's another benchmark that says beyond this time, now you also have to have permission from the insurance company to have it vacant. So again, this goes back to disclosure. So when you sit down with your insurance provider, ask them the question, I rent this property to other people. When a tenant moves out, I always like to go in, clean it up, paint it, fix some stuff, and then put it on the market to rent it. Sometimes it's vacant for a week, sometimes it's vacant for a month. As an insurance company, what do you need from me to make sure that my coverages are not going to be removed completely? And the insurance provider will tell you exactly what you need. There are some conditions that can cause vacancy to not be vacancy. If there is, in some situations, a reconstruction endorsement that can be added to a policy that will give you coverage. There's also minor renovations that you can be doing that could make sure that the coverage stays in place, all coverages stays in place. So there are things, but again, that has to go back to the conversation. If you're dealing with the cooperators, we deal with one company, one policy. It's the same for everybody. If you're dealing with a broker, they could have 5 different companies with 5 different sets of rules. So you have to be very specific. With my insurance provider, what are their rules when it comes to vacancy, and especially vacancy between tenancy, and making sure that you're properly covered. And again, if you have a rental property and you have, let's say, for example, it's a $450,000 house with 2 suites, and you don't have the proper coverage and it burns to the ground, the mortgage company are still going to want their mortgage payment. So you want to make sure that you're protecting your investment properly. And again, it goes back to proper disclosure. Give the insurance company the opportunity to properly underwrite their business. If an insurance provider ever says to you, don't worry about it, it's okay, leave it vacant, get it in writing. Tell them to email you that, you know. So I love email communication with my clients. It gives us an opportunity to cut and paste wordings to make sure that the fellow understand they can read a specific item and get back to us, ask us questions. We always like to touch base with all of our clients, either in the office or by phone, but it's always good to follow up with a client. And as a client, you should say to the client, if you have a conversation with an insurance provider and they tell you this, this, and this, just say to the insurance provider, can you follow up with me with an email? Just send me that in an email so that I have that in writing, and then you're okay.
This brings me back to the importance of like having this relationship with a person. And I think there's a big trust factor that kind of goes into this, as well as like dealing with someone who maybe understands those different terms of unoccupied, vacant, rental property, primary residence. There might be a lot of people who are underinsuring themselves or are not being properly covered just because they don't have a proper understanding of some of these terminologies and the way their insurance works. So being able to send that email or pick up the phone becomes extremely important in
Becomes, yeah.
in instances like this. So I think you explained it beautifully on that. On the topic of primary residence, rental properties, vacancy, any last thoughts, Declan?
Yeah, just be brutally honest with your insurance provider. And, there might be some insurance providers on here listening and saying, oh, he didn't mention this. I'm not here to be the be all and end all for insurance. I'm not a guru when it comes to insurance. My biggest message is talk to your insurance provider. And if they're not returning your call, give me a call. I'll return your call. So, uh, yeah, so it's not, nobody's out to get you. Nobody's out to do you harm. We just want an opportunity to properly underwrite the risk and give you the proper protection for the proper circumstances.
Before we get to your contact info, Declan, last time you were on, we asked for advice for a younger version of yourself. This time, I'm going to ask, do you have any books or movies that either you would recommend or that are just personal favorites of your own?
Okay, so I have two movies. Uh, one I've watched at least 30 times, and that's Casablanca. I could actually sit and watch Casablanca, and every time I watch it, I get something different from it. In terms of being a movie, it is a real movie. It is a movie. And the other one is a little bit more obscure. It's an early Mickey Rourke movie, and it's called The Pope of Greenwich Village. It's very difficult to find, but it's an amazing buddy movie, friendship movie, entrepreneur movie. It's I do love sales movies as well, like movies like The Boiler Room, Tin Men, Glengarry Glen Ross, great sales movie. But if I was to pick two to watch on a warm or cold winter evening, it would be Casablanca and The Pope of Greenwich Village. In the insurance, okay, go ahead. Yeah, yeah, yeah. So Casablanca is on TV regularly. I read a lot at work. You're reading policies, you're reading contracts, you're reading all sorts of stuff. So when I get home in the evening, I don't read a lot, but I do have Audible and I listen to books. I think in my library at the moment, I've got about 25 different books. I'm trying to listen to Ulysses by James Joyce at the moment. It's very, very difficult to read and very difficult to listen to. But there is a lady called Morgan Llewellyn, and she writes Irish historical fiction, and she's an amazing writer. And she takes a lot of Irish folklore and she puts it all together into a very cohesive story. And so if you ever see Morgan Llewellyn, she's very, very, very good.
Irish folklore. The one thing I never thought I'd chat about on the podcast here, but thanks for
There
that,
you go.
Declan. Bringing it back to contact details. If anyone has questions or if they're saying, I really hope that you can help me out with my next policy, how can they get in contact with you, Declan?
Well, I was reminded that we have an Instagram, we have Facebook, We have LinkedIn. Not exactly sure how all of that works, but we do have an amazing receptionist called Haven, and she can be reached at 306 934 7331. And she is amazing at directing people to the appropriate person in my office.
A lot of people watch movies or read books to gather information, but even having a conversation with you, Declan, it is like opening up the insurance encyclopedia. So, again, thank you so much for coming on it and sharing your expertise on these insurance topics that, again, I'll reiterate to the average person are very boring, and it takes a special kind of person to make it interesting. So, I really thank you for being able to do that. And thank you so much for coming on again.
Thank you so much for having me. It's been a pleasure. And just a plug for Ron Caroni, the best mortgage broker in Saskatchewan.
Oh, stop it, Declan. I really appreciate that. Thanks very much.
All right, sir. Take care.
Thanks for checking out this episode of the Saskatchewan Real Estate Podcast. If you found some value here, make sure to like and subscribe to never miss a future video. If you are in the market for a mortgage in Saskatchewan, a purchase, a renewal, or refinance, please reach out to me. I would love to be a second opinion or help guide you through the process, especially at renewal time. We all know that the banks are not in your corner when trying to save you money. So when they send you out that renewal letter, do not sign on the dotted line. Please give me a call. Let's see what the rates are at that time and see if moving could save you thousands of dollars. Until next week, I'm Ron Caroni, your Saskatchewan mortgage professional. Bye for now.